Hello traders, it's Tuesday, August of 22nd, and this is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video, and first of all, let's review the yesterday market movement. So the first instruments we're referring to the dollar index in 4-hourly chart. So the US dollar index, which measures the greenback spread against a trade weights basket of 6 major currencies, was traded lower against a basket of global currencies on Monday and fell by 0.35% to 93.01 amid an uptick in safe haven demand, following renewed geopolitical tensions in the Korean Peninsula as the US South Korea's military exercises got underway. So also adding to the downbeat sentiment on the greenback was Chicago manufacturing data that undershot the economy's forecast. So the Chicago Federal Reserve Activity Index, measuring the economy, activity and inflation projections, missed expectations slightly, falling 0.01% to 0.15 from the previous month. So the slump in the dollars comes ahead of the key events due later this week, including the speeches by the central bankers Janet Yellen and also Mario Draghi. And these were expected to provide further directions for the beleaguered dollar. While on the other hand, the greenback also lost ground against the safe haven currencies, with the pair USD JPY fell 0.3% to 108.86 after the US and South Korea began computer-simulated military exercises on Monday, and risking a reaction from North Korean leader Kim Jong-un, who may view such exercises as preparations for an invasion of the isolated nation. Meanwhile, the Canadian dollar traded roughly flat against the US dollars and traded around 1.2582 on yesterday, and this was following the weaker than expected wholesale sales data, which widely viewed as a leading indicator of consumer spending of Canada. Having a tad in commodities markets, the gold price was traded near session highs on Monday, rose $5.58 or about 0.59% to $1,297.21 a troy ounce. So this is in the wake of continued dollar weakness following growing fears over the geopolitical tensions in North Korea after the US and South Korea began military dialogue. So the safe haven demand rose, supporting a move higher in gold price after the US and South Korea began computer-simulated military exercises on Monday. So the Pyongyang warned on Sunday that the annual US and South Korea military exercises are reckless behavior driving the situation into the uncontrollable phase of a nuclear war. So the rise in the geopolitical tensions in the Korean Peninsula comes amid turmoil in Washington as the West continue to doubt whether the recent political controversies engulfing President Donald Trump will delay the introduction of his pro-growth economic agenda. So gold price move higher, however, could come under pressures later this week should speeches by central bankers Janet Yellen or Mario Draghi include the hawkish undertones. So the chief markets analyst at Think Markets, Naeem Aslam says a surprise out of Jackson Hole is going to bring mammoth move for the gold price. As for the oil price, the crude price was settled lower on Monday, fell $1.14 to settle at $47.37 as the investors continue to lose faith in OPEC's ability to stem the glut supply amid the producers meeting to discuss warnings compliance with the deal curb productions. So the crude price started the week on the back foot despite an OPEC meeting on Monday to discuss possible measures to tackle the fall in compliance with the global pact to cut output. This was following the data in July showing OPEC compliance slipped to its lowest this year. So an analyst at ING Bank wrote in a note Monday morning stated that given rising OPEC productions over recent months, there will be some concerns by member countries over slipping compliance. In May, OPEC and non-OPEC members agreed to extend production cuts for a period of 9 months until March of 2018, but stuck to production cuts of 1.8 million barrels per day agreed in November last year. But also weighing on oil prices were fears of falling demand for crude as the US summer driving seasons nears an end, while the number of US rigs drilling for oil continue to fall, suggesting that drillers are scaling back operations in the wake of lower oil prices. So the summer months are traditionally associated with the start of the US summer driving sessions, which usually spurs heavier refining activities. So according to oilfield services firm Baker Hughes on Friday said its weekly count of oil rigs operating in the United States last week was fell by 5 rigs to a total of 763. And the weekly rig count is an important barometer for the drilling industries and serve as a proxy for oil production and oil services demand. Alright, so now we're gonna go through the highlighted economic data for today. Okay, yesterday was a quiet trade of Monday, so it doesn't have any data or events that be released. So as for today, during the European trading hours, Germany is going to release the zero economic sentiment for August, and it is expected to be slightly weaker compared to previous 17.5. It is expected to fall until 15th. And during the North America trading hours, Canada is going to release the core retail sales for June, and it is expected to be grow slower than the previous. And here comes some technical analysis for the G7 instruments, and the first instruments we're referring to the Great British Pound against the US dollar in 4 hourly charts. So the pound was remain traded in a downtrend against the US dollar, but currently hovering at a range between 1.28600 and 1.29000. So the red colored 20 moving edge lines was turned directions and pointing upward now, so signals to be ranging for short term. But however, it is still in a downtrend structures, so a closure below 1.28300 suggests to drop further along with the downtrend. And the next support level we can refer to 1.27400. Otherwise, closure above 1.29400 signal to experience a short-term retracement and move further higher towards the next resistance level at 1.29900 in short term. While the euro remained traded in an uptrend against the US dollars, but it seems like losing momentum, so it remained hovering at the range of between 1.16900 and 1.18200. So it is only with a closure that's above 1.19100 will be considered continuations of the current uptrends, but otherwise closure out of the range and below 1.16500 is a signal to experience a short-term retracements and drop further towards the next support levels at 1.16100. On the other hand, the Aussie remained traded in an uptrend structure against the US dollars, but it seems like losing momentum, and it is remained retracing and currently hovering above the both moving average lines. So a closure above 0.79700 is the signals for it to move slightly higher in short terms. But however, referring to the MACD indicators, both movement lines were moving flat, and additional with the weak momentum suggests to be ranging in short terms, and the support level we can refer to 0.78800. Meanwhile, the Kiwi remained traded in a downtrend against the US dollar, but the downtrend seems like losing momentum, so the price was closed above the resistance level of 0.73000 and the both moving average line. So this taken as a signal for it to move slightly higher in short terms, so a price closure that's above 0.73500 suggests to retrace more and move further higher towards the next resistance level at 0.73800. As for the Japanese yen, it is remained traded in a downtrend against the US dollar, with the both moving average line expanding downwardly. So a price closure that's below 108.500 is a signal for it to drop further along with the downtrend and fall towards the next support level at 108.200. technical analysis for the commodities markets. The first instruments referring to the gold price. So the gold price remained traded in an uptrend with the both moving average lines expanding upward now. But however, referring to the MACD indicator, the both movement lines was crossed and pointing downward now, which taken as a signals for it to move slightly lower in short terms. So price closure that's above $1,300 a troy ounce suggests for it to continue its uptrend and move further higher towards the next resistance level at $1,307 a troy ounce. As for the oil price, it is remained traded in an uptrend but losing momentum since it retraced again from the level above the both moving average lines. So a price closure that's below $47.20 a barrel signals to experience a further retracement and fall further towards the next support level at $46.30 a barrel. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.